Born in the USA. Today we're going to be going over the S&P 500. I've got my American hat on, which I've just gone out and bought, not specifically for this video. I believe it's a Patriots team, so if you are American, let me know if they're any good. I don't have a clue. In this video, we're going to be going over my prediction for this next week. We're going to be understanding where exactly we can expect the market to go. I do this video once a week, towards the end of the week, of course, going into the next week. So if you are interested in videos like this, then please do hit a like and subscribe. But with that being said, let's get straight into this. So currently we're looking to see the market is up 17% since its bottom there, and we are now above near enough every exponential moving average apart from the 100-day. We have obviously seen massive news coming out of the US markets this week, as we've seen UK trade deals, which are really good. But now I'm looking into it deeper. We're starting to see that a lot of people in the UK aren't actually that happy. I think it's 2/3 of people within the UK think that we could have got a better deal out of this. So I guess the viewpoint on our perspective is it's no better than it was before the presidency of Trump. And so essentially, it's not really a deal, is it? It's just a better deal than what we were getting given with the current state of the tariffs. But it's a deal nonetheless, and hopefully it's something to work on. But of course, Trump is having talks now with China when this decides to load, which is obviously going to be absolutely fundamental for the next couple of weeks. Within the US market, as people are now going to start to either buy in heavily or sell off heavy, dependent on what sort of route this actually decides to take. But by the looks of it so far, it does look to be as if it's going to be going down a very positive route, especially here. It says 80% tariffs on China seems right, which isn't obviously something which you want to see. So hopefully something can be negotiated between the two parties and tariffs can start to cool off, because it is of course a massive catalyst for the US market's recent sell-off. But I do still think the markets are massively overvalued. We're at a Shiller's PE ratio right now of 34%, which is absolutely massive still. We want to see that fall down way lower. If you look back to historic rates, it's meant to be around the 16 to 20 range, so it is massively overvalued right now. But I just think retail investors don't really care about overvaluation so much anymore, so we're obviously just going to see this continue to rally, which is ideal if you've got money in the market, which I do, but I do think it could definitely be less sustainable, especially when people do start to catch on to that. But we are definitely now seeing a significant uptrend within the US markets, and we are now in a long position on the MACD indicator, indicating that there is just way more growth yet to come. But that could, of course, quickly switch back down into a short position should these negotiations really not go to plan for Trump. We have seen the Fed actually announce that they are retaining the current interest rate of 4.3%. So I mean, that was to be expected. I have a current health score for the US market to be set at 60 out of 150. So let's say it's 50. It's a third of where it should be at a healthy level. So it does seem clear as to why the Fed have actually retained their interest rates at such a low level, just because intrinsically the market does look to be quite unhealthy in general for the US. So I would like to see that start to increase over the next week. Of course, next week we do have CPI data coming out, which is going to be quite fundamental to see where exactly the market will actually turn out. But here we can see some massive breakout stocks, which we currently have, which I'm covering with my webcam. We can see some breakout stocks for next week here. Anything in yellow is a potential breakout stock, but there is a lot of due diligence that needs to go into these stocks to actually see whether or not they are true breakout stocks or if they're just unsustainable pump and dumps. But that's something in which I normally do. In fact, the video for that will be out tomorrow. I've gone over I think it was five potential massive breakout stocks for next week. To kind of ruin the point of the video, but please do go watch it. The best stock was it was Charter Communications, which is basically they do US Wi-Fi in short, but they do look to be massively undervalued. So, but check out the video tomorrow, please, because I haven't just made a video for no reason. But back to the S&P, this has been the third consecutive week of gains, the longest streak in 2025, driven by robust earnings from mega cap tech companies and optimism surrounding trade negotiations. However, this upward momentum is juxtaposed against a backdrop of economic challenges, including a 0.3% contraction in Q1 GDP and a 40% surge in imports due to tariff front-running, leading to a significant inventory build-up. If you're wondering why I'm looking over there, it's because I've got a different monitor. I'm not just missing the camera for no reason. There are some key risks going into next week's market sentiment. Tariffs and uncertainties, of course. The 90-day pause on tariffs is set to expire in July, which is coming up in the next couple of months. And the lack of finalized trade agreements introduces potential volatility. This new hat is really quite itchy. I don't know why, but there is of course recession concerns, as the IMF said that there was a 40% chance of US recession a few weeks back, and Goldman Sachs actually warns of a 20% drop in the US stock market, citing raising trade tensions and increased recession risks. And of course, we have inflation pressures. Economist, oh my god, I really do struggle to say the word. Economist, oh, this is not going to get any easier. Nouriel Roubini, definitely said that wrong.
Nouriel Roubini
Anticipates a mild recession by Q4 2025, potentially triggered by tariff-induced inflation. Wow, I'm really struggling on my words today, with core PCE inflation possibly rising to around 4%. And we are, of course, expecting to see CPI data come out for April. Obviously, in March, it fell by 0.1%, which is not ideal. You want to see consumer price index increasing, of course. And I do actually have a ideal range somewhere on here. If I can find it. Oh, here it is. So an ideal range is between 2 and 3% for CPI. So when it's actually dropping, it's definitely a risk of deflation. So what are some big plays for next week? Well, according to Morningstar, they suggest overweight value and core sectors, particularly energy, which I actually have my own preference within energy, which is KEG, which is Constellation Energy. I have these lot to be massively undervalued. Ignore that indicator, just put that on for comedic effect. But I do actually have KEG to be massively undervalued, and they are breaking out with quite a lot of momentum. This was a stock in which I said last week, I did a breakout video last week where I said a stock which, well, I did 4 stocks in which could potentially break out, and KEG was one in which I mentioned, and it did break out. It went over 10% last week, and I do still expect it to continue, but this is not financial advice. And over here, I can show you my intrinsic valuation for KEG. Bear with me. So KEG is this one here. I have an intrinsic valuation on the bullish side to be set at $491 and the bearish side to be set at $279, and the current price is set at $268. So that just indicates that this stock does look to be massively undervalued, and it could have a massive upside all the way up to potentially the $400 range. But it is key to say that they are definitely overvalued on an RSI. Well, not overvalued, but overbought currently. And it does actually look to be quite sustainable, as you can see on a 15-minute chart here. Since their spike up earlier this week, they haven't actually fallen back down. And when you compare the day chart RSI, I think it's fair to say that I don't actually see this falling down. I think they would have fallen down already if they were going to, but I think this could be a really good stock to be getting into next week. But if you want some more breakout stocks, then please come back for the video tomorrow, because I put a lot of time into my videos, and this was like the 4th video I've recorded today, and not to mention all the YouTube shorts. I spend a lot of time on this, and it never gets any views. So the outlook for the week ahead: while markets have shown resilience and convergence of trade policy uncertainties, potential inflationary pressures and economic slowdowns signal a cautious approach for next week for definite, as again, we really just don't know where the macroeconomics will lead us next week. But again, I don't really think it should have too much of a play. I feel like people are kind of a bit bored of the macroeconomic news at the moment with tariffs, and people are just thinking, I might as well just put money in dollar cost average my way all the way up, because it will go up eventually anyway. And I think that's kind of what we're seeing, and it's not a sustainable approach, especially when you look at Schiller's PE. Markets are definitely looking overvalued, and earnings for Q1 are definitely not keeping up. So it's something in which could potentially take the elevator down very quickly, even though it's taking the stairs up right now. So it is something to take with a lot of caution for next week. But I do think we will continue to see an upside, if not a bit of sideways action. But it is hard to say, because if we do have these trade talks with China, and even they're talking about doing Swiss trade talks next week, I do think if any negative news comes out, it can drop very, very quickly all of a sudden. But long term, if you're looking long term, I wouldn't worry. But when are these US tariff trade talks actually going ahead with China? Well, it is between the 10th of May and the 12th of May in Geneva, Switzerland. So do keep an eye out for that. I don't actually know what days of the week that is. I can't be bothered to check. But now let's get straight on to some individual stock analysis. Some of your favorite stocks, some of the big US tech stocks, to see where exactly they could potentially be heading in the next few days. And we're going to be starting this off with Hims and Hers. We are looking as if this stock has seen a lot of momentum in the last couple of days. And it has actually seen a bit of a sell-off, but there's a lot of people saying that this stock should go to the moon, and they are now expanding globally. So that's definitely going to be massive for Hims and Hers. I actually have a valuation for Hims and Hers already, and I did downgrade them previously, but this doesn't actually include the fact that they are not geopolitically, but expanding globally. I've gone from $66 on the high side to $43, and on the low side, $34 to $23. So even if we are looking on the high side, it's fair to say that Hims and Hers is definitely pushing it now. It's on $50 as we speak, and it's something in which could definitely go higher. Its next level of resistance is going to be way up, I imagine. It doesn't even have one on this indicator, but realistically, it would be around the $69 range. So it's fair to say that Hims and Hers is definitely one in which could definitely go higher. Should it? Maybe, maybe not. At the moment, I'm going to say maybe. I do think this does have the potential to go higher, especially if they are expanding globally and they are actually smashing their earnings out of the park. So it's fair to say that Hims and Hers is definitely a stock in which should continue to rise. And if we do look on a thingy-mabobby, a analyst recommendation, they are actually putting this in at a hold at the moment, indicating that maybe it shouldn't, according to the analyst. But I don't know. There's a lot of hype behind this stock. I see it and I don't at the same time. So take this stock with a lot of caution. Put your stop losses in place. I know I've got mine in place. I've been riding this since the $29 mark here. And yeah, just take it with a pinch of salt, essentially. Okay, so now let's take a look at Google. This is ridiculous, this stock. It should be so much higher than it is. And here it dropped because Apple basically said that people aren't using Google as much through their devices. Yes, it's a good reason to sell off, but I mean, how much has this stock fallen down since its peak? It's fallen approximately 25%, which is just crazy. In my head, that's a really good time to start buying into Google. I mean, Google's current PE ratio is way down below 20, which is really cheap levels to be buying in at Google. I mean, it's at 17. I mean, Google, in my opinion, is the best company in the world. They do everything. They're now even looking, they do AI. Their retention rate is amazing because they're just an ad browser at the end of the day, and they get money through advertisement. And of course, now they're looking into quantum, and they've been doing that for a few years. It's very, very future-proofed is what I'm trying to get at here. And when people are selling it off, especially because of tariffs, I know that they're going to be affected by tariffs in some sort of knock-on effect from advertisers not having so much money to spend on marketing. But this is not a company in which should be primarily sold when macroeconomics come into play. I think it's fair to say this is a brilliant stock to be buying at these levels. I do have an intrinsic valuation for them somewhere, but I don't think it's been updated in a while, so I don't really want to talk about it. I actually don't think I've got one on here for Google now I'm looking at it, which is a bit poor from me. That's something I really do need to fix. I've definitely done them before, so definitely I can recommend Google as a good stock. I'm not a financial advisor though, but it's just such cheap levels right now, and it's just not really justified at all. It should have a lot of upside from here. Furthermore, when we look at Goog on a analyst recommendation, based off of 66, the mean is at a buy, with 40 putting this at a strong buy. I mean, there's just massive upside for Google. I just don't understand why people are sleeping on Google at the moment. So if you do hold Google, continue to hold. That's my only recommendation. But now let's move on to SOFI. Again, I just put that there for no reason. So looking at SOFI, they've just entered into a long position on the MACD. They had their earnings where they had an incredible triple beat. They are looking to be in a really, really strong position. Of course, they are well diversified along many fintech sectors. They do student loans, they do normal loans, they do mortgages. They're obviously now doing crypto. They do everything, and it's just ridiculous the amount of stuff they do, and they are massively undervalued. I mean, even on my system here, I have SOFI priced in. I've upgraded them previously from $118 to $150, and I actually downgraded them on the low side, but I think that's mostly due to AAA bond yields increasing, because obviously people aren't going to be taking out loans when yields are up. So it's fair to say that SOFI took a hit on that on the low end, but on the high end it did actually still seem to increase, and that would be because their growth rate and their surprise rate both increased, indicating that this stock has a lot of room to run. I mean, we're currently at $12 and I have an intrinsic value set all the way up here, so it's like I can't not be buying SOFI at these levels, you know. I think this could be definitely the next like Tesla or Palantir. It's just an amazing company, and I really do believe in what they do. I don't want to be like a hype train person for SOFI, because there is a lot of them on YouTube and they are very annoying. They're just, I mean, some people just make videos on SOFI. I can't seem to get this scale right now. Oh, that's why. It's just annoying. Sorry, I'm getting off track here, but SOFI, very good company, amazing company, definitely one to watch and maybe to buy if you're not in it already. And dollar cost averaging, don't put it all in at once, and definitely put your stop losses in place, but it's definitely one in which should continue to climb up. It's just really struggling to get its footing now. Ever since it had an analyst downgrade back in around December, maybe January time, it's just continued to fall, and it's not really fair. So this might be the final stock for this video, because I do not want to make this too long because people just end up not clicking it. So Palantir, a lot of momentum in Palantir. They had their earnings where they barely beat estimates, and it could potentially be a sign for a massive slowdown in Palantir. But it's probably not, let's be realistic. This is probably just going to continue to go parabolic. It's one of them stocks which just goes crazy. I mean, from its recent fall down in when was that, February, I think the first long position here was opened up in June, so you could have had a child in the time in which it took Palantir to finally actually have a reasonable sell-off. Don't get me wrong, Palantir is massively overvalued. It's ridiculous how overvalued it is. It's currently at a PE of 505. I mean, that's ridiculous. I mean, I do actually hold Palantir, so I am a bit of a what's the word? Just an idiot. We'll go with idiot, because it's not a sustainable stock. But I am momentum trading it, and I do have a lot of I do look at it daily, of course, and I am obviously making money on it, but it shouldn't be this high, and it is. So what can I say? If you want to momentum trade it, it's probably a good stock, but it's definitely overvalued, so it does have the potential to fall down very quick. Say if this earnings here was in the red, oh my god, it would be a bloodbath. So I'm going to end this video here because I don't want it to drag on for too long, but I hope you have enjoyed it. If you can watch some of my other videos, we greatly appreciate it. I've just figured I went for a walk earlier and I realized that my videos are doing really bad at the moment, like really bad. It's quite annoying because I do put a lot of work into these videos, but oh well. So if you could leave a like and subscribe, that would be greatly appreciated, and I will see you for the next video.